Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video. What's this about today? Today is about talking about dojis. And all I want you to know in here is that it's not just the doji that matters, and it's about the follow through. But today is just about identifying the doji and how to scan for it. So a doji forms when the opening and closing prices are almost the same. It looks like a cross or a plus sign on the chart, and it can look like this. So it can look like a bar where right here, the open and the close are almost the same. It can have all that waffling up here, but it closes there. That's more a gravestone doji. Then you can have this kind of doji where it goes up, stays near the top. So, and just the open and the close are about the same. So just keep that in mind in there of those kind of things that we watch. It doesn't matter really if it's on the bottom or the top. It's the follow-through day that matters. All it does is signal indecision. Buyers and sellers are battling and nobody's winning. So on its own, it's neutral. It's what happens next. But the point is that it can help you if you know, just have your radar up when you see that. When you see that kind of doji. Now, there's a time and a place for everything. What do I mean by that? When you've had a protracted move up like we've had, you get a lot of these crescendos where you go up, up, and then you get the big old doji, and then you get a reversal the next day. That's just what you get in these type of markets. You get the crescendo and that. You get them on the downside when you're going down. You can see it right here. You got the crescendo, you got a doji up here. It's always the follow through. But today we're just going to go over downside follow throughs. Now, the ES or the NASDAQ is sort of settled down for a couple of days. So you're not going to get as many signals like that. I just want you to know that. But what's been working? What's been working is when you get a move up, you get an indecision candle too far from that dotted line. That's the 9 EMA. So you know and I know how many people have been buying calls when it's up here. When it's this far from the 9, the likelihood is you're going to lose money. You're too far from the 9. All these times it got too far from the 9. Indecision candle followed by a downside follow through. That was good for 7 points. Doesn't look like it, but it was 7 points. So the first thing you have to do is, how do you scan for a doji? How do you decide what the body and all that is? Well, instead of being too complicated, I'll show you the easy way. I mean, nothing's easy, but I'll show you one of the ways I do it. So you can go to FinViz and put doji in there. So I'll show you. You go into FinViz. You know, I show this all the time. And you can go into FinViz, do a screener, and you can just take technical, and you can put candlestick doji, but it usually has too many. 143. Do you see that down here on the bottom left? 143. That's just too many. The other is if it's a $3 stock, of course you're going to have a lot of dojis because it doesn't move a lot. So I like to make it over 50. That's personal preference. Price not in here. So we're just going to make it over 50. The other thing, if it's a stock that hardly trades, yeah, you're going to get a lot of dojis. So I want X funds, and I want current volume over 400,000, personal preference. It's 11 stocks on FinViz. That's it. Go put them on charts. Are they really dojis? Well, let's see. Yeah, AMSC, there's a doji for you. Right there. APD a doji, CHDN a doji, COO a doji. Yeah, they work. So you had 11. Now, the thing is, there are a couple of things that are important with the doji. One of them is the exhaustion doji, like I showed you. But there's 3 other things that we like. One of them is if you see a bull flag and you do that, you want at the bottom of the flag an indecision candle. That has your radar up to see if it breaks up, so it breaks the bull flag, and conversely with a bear flag. The other thing is a lot of times you get a doji at resistance or a doji at support. So those things are a big deal. But let's go and scan for a doji just so you know what we're talking about. So we're going to go into here and scan. So all we're going to do in a scan is this. There are a number of ways to do it. You can take my main list, which is 194 active stocks. Then you don't need the last, you don't need open interest, you don't need volume, nothing. But I'll just show you a simple scan. We're just going to take the S&P 500, or we could do it like FinViz, all stocks. Then we take it over 50, just like we did in FinViz. Then what we're going to do is take the moving average, the average volume 400,000. That's what we did there. You know it's a lot of stocks. Now what you're going to do is you're going to go into Add Filter and go to Study. Then you're going to go here on the ADX crossover, see that? Bearish and bullish candlesticks doji. Now this is where it's a point of contention. So when you look at a body factor, there's your length. And the body factor, is it this thick or is it that thick? So you can have a body factor 0.05 or you can go 0.15. I usually do 0.15. So you know the one on FinViz was 11. How many is this? 119. So why is it 119 when FinViz was 11? Well, that's a good question. But let's go and see. Well, number one in FinViz, was there anything we did different? No. It's just FinViz usually doesn't have as many. But when you go into this, just go and sort it by expensive. Is Intuit a doji? So I always look. So Intuit. Not really, sort of. Sort of, kind of. So how about the next one? Let's take MSCI. Or let's take ISRG. I like crazy stocks. Yeah, they're having their doji a little different. Why? Because I made it 0.15. Make it 0.05. I bet they're a lot less. Yeah, 29. Now we have it because you're making that middle candle smaller. You're making the middle candle look like that, not like that. So now let's put into it. Does that fit in our criteria? Better. What else is in there? How about Lockheed Martin? Sort of. So you have to look at them one by one. And what I see in there, that's not that great. Now there's another way to do it though. You see the doji here. So you could take all of those and see if one looks more identifiable than another. That's what I do. How about the AMSC? Oh, maybe if I put daily, it would be a little better. There, AMSC, doji, Intuit. Doji, yeah, 1 minute, no. So daily sure is. Okay, how about Lockheed Martin? Let's go back to it. There you go, doji. Yep, they're working great. Now, if you went instead and made the body like 0.25, they're going to be a heck of a lot more because they're not dojis. The body is too thick. You want this down to here. And then it worked great. So then you can manipulate a lot of things. You could have a follow-through day. You could have it too far from the 9. You could look for bull or bear flags. But that's your basic scan. 20 and 0.05, 50 over 400,000. And it's all of 29 stocks. Go and put up, let's say one of them I want to trade tomorrow. How about Global Payments, GPN? Yeah, right there. I am very interested in playing that tomorrow. I'll respect the break in either direction. Hope you like the video. Take care. I'm going to put a lot of these kind of learning videos, 3 minutes or less, on YouTube. So try to follow me there as well. Just anything to funnel to our room, the Chart Patterns Mastery. Anything I can help with education, I found comes back to equal subscribers. So take care. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.